My name's Matt Badylak. I'm the President and CEO of Galiano Gold, and today I'll walk you through a quick presentation and introduction of the company. So just a quick snapshot of the company itself. We are dual listed on both the New York and Toronto stock exchanges. We currently have a market cap of just over $450 million. We're showing here on the slide also our share ownership in terms of the institutional funds that hold Galiano stock. You can see here that we've got some very strong long-term shareholders in the name, as well as Goldfields at 19.9%. And I'll speak about the Goldfields ownership a little bit later on in the presentation. You can see here also that from a retail perspective, there's 28% of total shares held in retail hands as well. And then lastly, in terms of the coverage, we have 5 analysts that cover the stock: BMO, Cormark, Haddam Partners out of the UK, HC Wainwright, and also Scotia here in Canada. This just shows where we're located in Ghana, West Africa. Obviously, it's a jurisdiction that I believe stands head and shoulders amongst its peers in the West Africa region. It's one that has a very stable government. It has access to a very skilled workforce and a very long history of mining in the country as well. So we ourselves are very, very comfortable operating in that region, and particularly from a perspective of finding skilled labour, that comes in ample spades in the region. On the left-hand side here, I'm just showing the gold belt in which we operate. It's flanked on either side by some very much more mature belts in the Ashanti and Sefwi gold belts, and we feel that where we hold our land package, we're very much underexplored, and there's high potential of further resource expansion. We do also have a significant resource base already. There's 2 million ounces in reserves at a grade of about 1.4 grams per tonne, and then another 3.6 million ounces at a similar grade in measured and indicated resources. So the picture here on the left shows our 5.8 million tonne per annum processing facility. This is a facility that was built back in 2016 and has operated at full capacity since. It has the ability to produce in excess of 200,000 ounces of gold per year, and we've modelled life of mine all-in sustaining cash costs at just under $1,100 per ounce. The asset itself is held 90% by Galiano Gold and 10% by the government of Ghana. That's a free carried interest. And we find ourselves in a very robust financial position at this point in time, with $131 million of cash at the corporate level and no debt, with a fully funded mine plan. The other thing to point out here is that the asset has previously, in recent history, been held in a 45-45 joint venture with a large gold mining company called Goldfields. We did rationalise that ownership and consolidated the ownership under Galiano in Q1 this year, and that was received very well and resulted in a significant rise in our stock price. So I'll just walk you listeners, Jasper, through the transaction structure, because it did have a very positive response, or did receive a very positive response in the market. Primarily, we structured it in a way to minimise shareholder dilution, and you can see here on the top that we did issue Goldfields, our partner at the time, with 28.5 million Galiano shares. That correlated or that resulted in about a 10% dilution to our existing shareholders. So very little dilution from a share issuance perspective. We also then structured the transaction to be very much back-end loaded with deferred and contingent payments. So in total, there was $85 million of deferred and contingent payments, which on a 5% NPV total about $70 million over the life of mine. If I talk you through the contingent first, there's a $30 million contingent payment that is due upon 100,000 ounces being produced from the Nkran deposit. The Nkran deposit is actually the jewel in the crown of all of our deposits at the AGM, and we're very comfortable in being able to service that payment at that time when it becomes due. As an example, when we were in the previous pushback in Nkran, we actually produced $90 million of cash in a very short period, a 10-month period. So we know that once we're in the body of the deposit, that payment is very much secure. The other deferred payments total $55 million, and the first tranche of that deferred is due in December 2025, and that's a $25 million payment. Subsequently, we have a $30 million payment due 12 months later in 2026. Both those have also been scheduled in periods of time in the life of mine where we have significant cash flows, and again, we're very comfortable that we can service those payments. There was some cash that was released to Goldfields at the close of the transaction. I'll just walk you through that a little bit. Prior to the transaction closing, we did separate our balance sheets into a corporate balance sheet and also a joint venture balance sheet. The balance sheet at the joint venture had grown significantly over a period of time, and prior to the transaction sat at about $143 million. What we did, $139 million. And what we did is we released $65 million out of that joint venture bank balance and issued that to Goldfields, and the remainder of that was retained in under the Galiano consolidated balance sheet. So again, if you go to the next slide, that may be a little bit confusing to listen to, but in terms of just pictorially or graphically showing that in terms of the cash position, you can see here that this is on the left-hand side is prior to the close of the transaction looking forward. We had at the Galiano level $55 million of cash, and then at the joint venture, the next bar over was $138 million. We then released the $65 million that you can see there in yellow to Goldfields, and then the balance of that joint venture balance sheet was consolidated under Galiano, and we were expecting to have $129 million of cash upon the close of the transaction. If you look on the right-hand side, this was our balance sheet at the end of Q1 this year, which shows that we had $131 almost million of cash at the company level, and there's no debt, and again, a fully funded mine plan. So again, if I just touch on this a little bit, it's a very unique structure in the sense that we were able to acquire the other half of the asset and double our production, double our cash flows, double our reserves and resources, yet at the same time build a cash balance at the corporate level. So very unique, and on the back of that, very little dilution to our existing shareholders too. So obviously it was received well by the market, and we've seen a big run up in stock price on the back of that. Just quickly talking about what this transaction means to us. This is a transaction that results in us becoming a very unique high growth producer in the West African space. It creates significant scale in the asset that we currently operate. I just walked you through the transaction structure as well and our financial position on the back of this. But one thing that I'd like to point out is the asset right now, the AGM, is one of the largest gold producing assets in West Africa that's currently not held in a mid-tier or a senior miners portfolio. So that's something that's interesting to note as well. This one here shows a little bit about where we're going in the next 12 to 18 months. On the left-hand side, you can see our organic production profile from now up until the life of mine average gold production. And you can see that prior to the consolidation of the joint venture on an attributable basis, we were producing, based on 2023 numbers, about 65,000 ounces of gold. Upon the consolidation of the asset at that same run rate, we double that to 130,000 ounces per year. And then we have an organic growth profile, which I'll speak to a little bit, that sees us ramping up to 240,000 ounces over the remainder of the life of mine. And that is very much de-risked with very little capital required to ramp up into those numbers. On the right-hand side of the screen, I'm showing just the all-in sustaining cash costs that drop correspondingly as we increase our gold production. Next slide here just shows our life of mine plan based on a technical report that we released in March 2023. It does show an 8.5-year mine life, producing about 1.85 million ounces over that period, with a NPV at a 5% discount and using $1,700 gold of $343 million. You can see the CapEx requirements, both development and capital, listed on this slide as well. And if you go to the next slide here, Jasper, what we are showing here is the impact of that life of mine plan at elevated gold prices. And you can see there the 343, which is based on a $1,700 gold price. If you look at a $2,400 gold price, which we're kind of in and out of at the moment, the asset NPV climbs to close to $1 billion. So very highly leveraged to gold price, and particularly in the current gold price environment that we're seeing, it's very beneficial to the asset and the company. I'll just touch on a few things in terms of what Galiano will be doing differently now that the asset is consolidated. I previously showed the life of mine plan that we produced last year. Over the course of 2023, we have continued to infill drill a lot of our deposits, and those deposits have grown as a result of that. We will be looking at capturing that drilling, as well as some of the drilling that was conducted in the first part of 2024 in an updated mineral reserve and resource statement, which we expect to publish in Q4 this year. On the back of that, we'll also be looking to resequence the life of mine plan as well, to try and find ways to bring forward cash flows to the front end of the life of mine and optimize the sequencing of all of our deposits as well. The other things that we will be doing throughout the course of this year are minor capital investments in the plant, adding 2 CIL tanks to the circuit, and also installing a secondary crusher to reduce our processing costs as a result of that crusher addition as well. Okay, and here I'm just going to talk you through a little bit of the exploration success that we've had over the last 12 to 18 months. On the right-hand side of your screen, in the brown boxes, we're showing 3 deposits that we've drilled throughout the course of the last 12 months. This is infill or resource definition drilling that we'll describe this drilling as. In the top here, you can see Abore, which is the deposit that we're currently stripping and expecting higher grade material to hit the mill in H2 this year. But I'll point out a couple of really good intercepts here at Abore, 45 meters at 12.4 grams per tonne. This actual hole is probably one of the best drill holes that we've seen on the deposit thus far. On the land package, not just at Abore, but across the entire AGM thus far. And we've then, on the back of some of this drilling, we have updated a mineral resource at Abore earlier this year. So we're now working on updating the mineral reserves at Abore, but the resource has been updated and it grew by about 38% on the back of this drilling. The second deposit here that you see as you go down is Nkran. We did target a zone to the south of that deposit during the 2023 drilling program, and we intercepted some really good grades there, and there's a potential for that southern extension to be captured in a updated resource and reserve later this year. And then the last one at the bottom is a deposit called Midras South, which we've been drilling to convert from a resource into a reserve this year. So in the technical report that we published 12 months ago, this was described as a resource only, and we're looking to update that into a reserve by Q4 this year. All of this drilling should have the result of increasing our life of mine over the 8.5 years that we currently have. On the left-hand side of your screen, in the green, I'm showing some Greenfields exploration results from 2023. One deposit in particular, Geologic, is one that we're highlighting here. It's located about 6 kilometres from the processing facility. And we've seen some really good shallow mineralisation there that is open along strike and at depth as well. So we're going to continue to drill that over the course of this year. And then in the north of our deposits, this is a tenement that hasn't had a lot of work done on it in the past, but the team conducted a significant soils sampling program there, and what they identified was a 4 kilometre long soil anomaly that showed some very good grades at surface. And interestingly enough, it sits on a topographical high, and down in the valleys below there, you can see evidence of alluvial mining that has taken place in the past. And so we do feel that that could potentially be the source of that, where we're sitting on the ridge could be the source of what the alluvial miners were mining down there. In this slide as well, I'm just showing for reference scale. I think it's important when we're speaking about this this tenement. It sits to the north of the mill by about 40 kilometres, and so we knew that anything that we found here had to be significant in terms of size and scale. And what we found was exactly that, was a 4 kilometre long anomaly. And you can see here just in that image to the left, we're showing the Esaase deposit, which is a 3.5 kilometre long strike. The Abore deposit is the next one there at a 1.8 kilometre strike, and then Nkran is just an 850 metre strike. So there is potential certainly here for this to host significant mineralisation, and we have planned 400 metres of drilling, 4,000 metres of drilling at Sky Gold B throughout the course of 2024. Here, what I'm just showing is some of the results from the infill drilling program at Abore. You can see that we intercepted significant grades along the entire along the entire strike length of the deposit. You can see here again, I'm showing the strike length of 1.8 kilometres, and then in terms of the depth that the 1500 reserve shell is mining down to, you can see that that's only 150 metres from surface. So there is potential for this deposit to grow from an open pit perspective going forward. This slide here just shows pre and post 2023 drilling and a mineral resource by category. So on the left-hand side, you can see in the red, this was the indicated mineral resources, and then third in the green, you can see there also a 1500 reserve shell that we're showing over the top of that mineral resource. On the back of the drilling that we've just conducted and updated the mineral resource on, you can see that indicated has extended significantly below the $1,500 reserve shell. And again, the team, as I said, is working to update the mineral reserve at Abore as we speak, ready for Q4 this year. Just moving on to Nkran with regards to some of the optimization and growth opportunities there. As I mentioned, this is a deposit that we refer to as the jewel in the crown. It is one that is located very close to the processing facility, virtually no haulage required, no road haulage required to get the grade or the tonnes into the mill. It's our highest grade deposit at 1.83 grams per tonne, and it hosts just shy of 600,000 ounces. You can see some of the 2023 drilling here below the $1,500 shell. And then actually this is the as-built topo. This isn't the 1500. What I'm showing here is the as-built topo. And then the other exciting thing about Nkran here is that you can see those deep holes that were drilled in late 2022. We do believe that post the depletion of open pit ounces at Nkran, that there is a potential for underground mining to exist at Nkran as well. So there is further potential for expansion here. All of this is yet to be captured in any technical report. This is upside to what we have currently in our life and mine plan. On this slide, I just want to touch on the recent history, and I've been very clear with the team here that what we're trying to achieve collectively is a reputation in the market that we can deliver to target. And you can see here some of the achievements that we've reached in the last 12 to 18 months. Certainly, we've delivered on what we set out to do. We've certainly delivered in terms of ounce production, in terms of cost guidance, in terms of cash balance, growing on the balance sheet. All of those things were big ticks. We also advanced our understanding of the technical aspects of the deposit after putting a new team together in late 2020. And we're well on our way at the moment with the recommencement of mining through the mobilisation of the contractor in late 2023. to start seeing higher grade mill feed in the mill by H2 this year, and certainly looking to achieve the 250,000 ounces of gold production from 2025 onwards, and we're on target to achieve that at this point. So just lastly, this is a summary slide. So again, I think the key point here is that the transaction with GFI certainly has created a unique high growth gold producer in the region, doubling our gold reserves, resources and cash flows immediately. We are located in a top tier West African mining jurisdiction as well. And the consolidation of the asset does allow the team to drive optimizations going forward. We do have a significant reserve and resource base and a very much underexplored land package that we're working aggressively with about a $15 million per annum exploration program allocated to reserve and resource growth. And then again, we find ourselves in a very unique position that we have a fully funded life of mine plan with a very robust balance sheet and no debt on the balance sheet as well. So, I think that sums it up here, Jasper. I think, we'll pass it over for questions if you have any.
So, Matt, could you tell us about yourself and your career?
Yeah, thanks. My background is, well, number one, I'll start by saying I'm a second generation miner. My father was in the industry before me, and I certainly was exposed to the industry from a young age. I think I recall being probably in the order of 6 or 7 years old and entering the gold room on a project in Western Australia for the first time and interacting with gold bars at such a young age. So it certainly, was something that was in my blood from a very early age. My background is operations. I'm a metallurgist by training. And prior to joining Galiano, I had spent 14 years with a mid-tier mining company called Eldorado Gold. During that time, I spent probably 8 of those years as general manager of 2 of their largest mines. Kışladağ in Turkey was one of those. I spent some time there. And then also in China, I spent about 10 years as well in total in China, operating some of their assets there and eventually divesting that portfolio in 2026. So really what I bring to Galiano is a very clear understanding of operational aspects of the business, what a mine looks like, how a mine should be optimized to generate maximum value for our shareholders. And I've really focused on that with regards to the AGM as well. So that's a little bit about me, Jasper.
Could you explain how have you built the management team at Galiano?
Well, I had a very unique opportunity when I first joined, and that was late in 2020. My initial appointment was as COO, and the company was just transitioning its headquarters from Johannesburg to Vancouver in Canada. So I basically had a clean slate to put a competent technical team around the asset to be able to manage the asset and technically. So the focus really was heavily on putting together a competent technical management team here in Vancouver, and then also supporting that management team with really good, competent people on the asset as well. And so predominantly the focus was to make sure that we build a team that is a team that understands the technical challenges, that has the ability to optimize the asset, to drive cash flows, and then obviously optimize shareholder value for all involved in the project.
Could you walk me through Galiano Gold's history? It would be good to get some background on that.
Yeah, obviously I joined relatively recently. I haven't been with the company dating back many years, late 2020. But this is interesting because it's a combination of assets that really has quite a long history, to be honest. We're mining deposits now in Abore and also Nkran too, for example, are deposits that were initially mined by Resolute back in the late 90s and early 2000s, and that part of the AGM really was shut down in early 2000s due to the gold price. If you recall, the gold price was quite low at that stage, and Resolute did a very good job, and I think were the first company in Ghana to actually go through the entire closure process at what was called then the Obertan site. And then subsequently from that, we had two companies that merged in around 2013 that held two separate packages of land or parcels of land. So the Obertan Resolute land was held by a company called PMI, who are an Australian listed company. And then there was a deposit to the north that we have now since mined, called Esaase, that was held by Keegan Resources. And as I said, around 2013, those two companies merged together to combine the land package and consolidate what is now the largest consolidated land package on the Asanko Gold Belt in which we operate. So we have about 450 square kilometres of mining and exploration tenements on the back of that merger. Subsequently, the combined entity, which was called Asanko Gold, constructed a processing facility and commissioned that in 2016. And in 2017, the joint venture with Goldfields commenced. And then again, more recently, we consolidated that ownership again under one single ownership in 2024. I will say that there was a name change between Asanko Gold and Galiano, which occurred just prior to my arrival. I think that occurred in early 2020. So, the Asanko Gold Mine is the actual asset itself. It was the name of the parent company up until early 2020, and then the parent was renamed to Galiano Gold, who operated the Asanko Gold Mine in Ghana. So just some clarity on the naming there as well.
Why was Goldfields brought in the first place in 2017?
Yeah, that's a good question. I mean, the Asanko built the mine, built the processing facility, and there was some debt on the balance sheet. And when they cracked open the first deposit, which was the Nkran deposit, in the upper portions of that deposit, they did see some reconciliation issues, and they got into a little bit of financial trouble at that time, which resulted in discussions taking place with Goldfields, who obviously also operate in Ghana. They were certainly drawn to the project. Again, I don't want to speak for Goldfields, but certainly my understanding is that they were drawn to the exploration upside and the underexplored nature of the land package that we hold. And they came in and joined as a joint venture partner. Galiano or Asanko at the time remained the operator of the asset, with Goldfields being a non-operating 50% partner.
Fantastic. And your timing was truly excellent in terms of the transaction. Why did the transaction happen or was announced in December, not, I don't know, a year before that? Or what made them willing to sell?
Yeah, I think you can never time perfectly any transaction. I mean, everyone's got something in their mind in terms of when a transaction should take place. And as you say, we were quite lucky that we saw the gold price run up very closely after the transaction was announced. But I think, ultimately, since I arrived at Galiano, there was an intention to try and rationalise the ownership of the asset. I thought it was an asset that needed a single parent, a single owner, rather than being split across a joint venture. I think in terms of timing, there was a lot of things that fell in place. I think number one, there was a lot of movement in the Goldfields senior leadership over the course of my time as CEO. And I think ultimately there was a lack of emotional connection in the Goldfields camp to the asset over that period of time as well, which allowed pragmatic discussions to take place on the asset. And I think ultimately Goldfields have done quite well as well off the transaction. I mean, they are supported 19.9% holders, and as you pointed out, and I said earlier, that the share price has climbed significantly since the transaction was announced, and we still have catalysts going forward with the ramp up in gold production expected in the next 18 months. So I think they've been justified in the transaction in the sense that they are seeing the benefits of our share price run up as well at the moment.
Yeah, definitely, and they also hold a royalty, so it has not per se been a poor transaction for them, not at all. But so how are your relationships with Goldfields and now, and what is their plan for the 19.9% shareholding in Galiano?
Yeah, the relationship with Goldfields is good, and it has always been good. I mean, it's, although Ghana is a very big mining jurisdiction. I mean, we all know each other in the country, and Goldfields are a big player in Ghana, and so therefore there's a lot of interactions that remain with them, both at my level and then also at the country management level as well. So overall, the relationship is strong. I think in terms of what Goldfields want to do with their 19.9, ultimately, that's up to them to decide. But obviously, they're seeing that we've done well on the share price recently, and there's more catalysts to come in the future. I can't speak for Goldfields in terms of what they wish to do with it.
Okay, excellent. But they have not requested a board position or anything like that?
No, they haven't requested a board position. And then just another point on that is that we do have a 12-month lockup on that stock as well. So, and that expires early next year. So, there is a lockup on that.
Could you describe the Asanko operation?
Yeah, I mean, it's a pretty straightforward operation in terms of metallurgy. Most of our deposits are free milling and see high recoveries on the back of a standard CIL circuit. There is a fair amount of gravity gold, probably about 50%, 50 to 60% of our overall gold is recovered in the gravity circuit. We have a mill and ball mill combination as well at the front end. So it's a very standard processing plant configuration or design. Most of your viewers probably would be familiar with that. And then the other thing that I'd point out is, it is a very large land package that we own, and there's multiple deposits that feed a central milling facility. So we do have a lot of infrastructure on site as well. There's haul roads that lead from various deposits into the mill, and we're contractor mining as well at the moment. So it's a pretty standard West African operation.
Almost all of the ore, is that fresh ore or sort of sulfide?
Well, all of it goes through a oxide transition and then a fresh zone. The majority of the ore is probably a fresh ore. Once you get into the guts of the deposits, you move through those oxidation layers, and the majority of the ore lies in the fresh.
Excellent. But when you're starting up mining, you'll be mining mainly oxides.
Yeah, at the higher elevation. I mean, if you talk about Abore in particular, where we are now, Abore is a pit that was previously mined by Resolute. And so what we're doing is we're taking down a pushback. So we're pushing it back, and then, there's obviously some peripheral ore, or there's ore around the periphery as we start to mine down, but the majority of the ore will be below the previously mined Resolute pit, and so that's all fresh material, right? So once we get into that, they'll be fresh.
What's meant with the pushback?
Pushback or cutback is basically a term that's used when you've mined a smaller open pit, and then you need to push it deeper, or you have to sink it deeper, and so then therefore you have to take more waste around the edge to get down and to push the pit deeper. So by doing that, you have a portion of waste that you have to get through and then mine down through before you can get back into the ore that sits below the previously mined pit.
But so then, for the past year, you have processed lower grade stockpile ore instead of mining directly from your pits. Could you explain why that is, and why you now feel comfortable starting mining higher grade ore at Abore?
Yeah, that's a good question, and it's one that it's never an easy decision to mine lower grade or to process lower grade stockpiles. I mean, I mentioned to you that in 2020 I came across a COO, and my main job at that stage was to build a technical team that's competent and able to manage this asset. What we found is that the asset needed a little bit of time for the team to advance their technical understanding of the deposits. The geology was probably misunderstood at that stage. We didn't have a clear understanding of some of the metallurgical recoveries at the Esaase deposit. The rest of the deposits we were comfortable with, but Esaase, where we were mining just prior to making that decision, did show some signs of preg robbing. And, we wanted to get a very clear understanding of the impact of that. And we were fortunate at that time as well that we had, about 9 million tonnes of ore on stockpile as well, which had built up over the years. And so we had the ability to continue to feed the mill and continue to produce ounces, albeit at a lower grade. But then we also made some adjustments in terms of our processing costs, our manpower structure, such that we could still be generating free cash flows at the same time as we're milling the lower grade ores. And maybe just to give you an analogy of this for your viewers, I tend to refer to this as an example, as if you were riding your bike in the Tour de France, right? And you had a puncture. And, you can continue to ride your bike with a puncture, but you're going to get further and further behind the field. The best thing to do is when you identify the problem or an issue, you get off your bike. You have to get off your bike, you have to fix the tire, and then you get back on the bike and keep riding. And that's kind of the way that I'll describe the transition to processing stockpiles. It gave the team about 18 months to drill the deposits in a far greater density, to do a lot of geometallurgical test work, to remodel the deposits, and then be very confident that, on a go-forward basis, we could deliver consistently to the plan. So that's what we did.
That's a good point. So because preg robbing effects, I assume your that rock at Esaase is quite carbonaceous, so CIL recovery is more difficult. How did you solve that issue?
Well, I think it's a issue that needs definition first and foremost, right? I think the first problem was that we weren't sure how extensive the carbonaceous ore was throughout the entire deposit, and we needed to define where it actually sat. And luckily for us, we found that, yes, there was one lithology that hosted some carbonaceous material that was causing the preg robbing, but fortunately it didn't extend out to the entire deposit. So we certainly defined where it is in the deposit. Secondly, what we did is we understood without any manipulation what that would do to the overall recovery of the deposit. And that's the actual recovery that we used in the technical report, being very conservative, because we know that we can do other things to optimize recoveries. But we didn't do that. We basically used a very conservative recovery, and we dropped the recoveries at Esaase from 94, where they were before, down to 78% on average for the Esaase deposit. Now, we know that when we go to mine Esaase, we'll need to segregate some of the higher carbonaceous material as we mine it, and we'll have to batch feed that through the mill. So we know that. And then the other thing that we've done too is we've taken some of that problematic material that we also had on stockpile, and we processed it through the plant in a batch period over about 3 to 4 weeks, and we added a little bit of kerosene to that material just to see how it reacts. And what we found is that just by a small amount of kerosene addition, the kerosene binds to the active pores in the naturally occurring organic carbon, and it has a function of actually increasing that recovery by about 5 to 8% within our circuit. So that was a batch trial that we did last year through the plant, and that came on the back of some lab test work that suggested that would be beneficial. So we feel that we've defined the problem at Esaase quite well. We understand that there's some further upside that we can achieve in practice there when it comes to mine that, and we also know how to mine it going forward as well. Like an example of that would be that all of our grade control drill holes at Esaase will not only be going out for gold assay, but also for carbon assay as well, and also preg robbing tests, such that we know before we mine a block of material how much carbon's contained, how much preg robbing impact is expected from that block, and depending on those results, we'll organise the blend and stockpiling. So basically, the way that we operate is you've got gold in solid gold that we basically gold contained in your ore that's milled to a very fine powder, and then we add sodium cyanide to the CIL circuit, and the cyanide basically dissolves the gold into solution. So it's similar to adding sugar to your tea, the sugar being the gold, once you add liquid, it dissolves and it's no longer in solid form, it's in liquid form. The issue is once it's in the liquid form, if you have organic carbon in your ore, that liquid cyanide gold complex can absorb onto the surface of the organic carbon, and being very fine in nature, that organic carbon basically robs the gold, which is why we call it preg-robbing. It robs the gold and it goes out to the tailings, and you lose the gold. So you want to avoid that from happening, and that's the issue that we're trying to address. And as I said, if you add kerosene up front to the circuit, that kerosene will bind onto the active pores of the organic carbon, so that absorption onto the active carbon is harder, or is less, is reduced, I should say.
Could you give us an update on where you currently are with the pre-stripping and mining at Abore?
Sure. So pre-stripping at Abore started late last year. The contractor is now fully mobilised and moving through the Abore deposit. We do expect that higher grade material will start feeding into the mill by the second half of this year. So that's on track as we expect at this stage. We are moving into the wet season at the moment in Ghana. So we have a new contractor moving through the first wet season with us. So obviously we're very aware of that and working with them to ensure that productivities are maintained over the coming wet season.
If you could walk us through the ramp up in transitioning from processing stockpile to processing higher grade ore, and when do you expect to have reached that sort of above 90% coming from Abore?
We do expect that to happen in Q3 this year, so we're not too far away from that.
Excellent. So really Q4 should be the full quarter, the sort of the most impactful quarter, because that by that almost all production will come from Abore, which is 50% higher in grade.
That's right. I mean, it's tail end loaded, I guess, the production for this year.
Currently, recoveries are in the mid 80s. What recovery rates do you expect with your higher grade feed?
Yeah, as the grade increases, we do expect a 94% recovery at Abore, and that's due in the second half of this year, as we mentioned.
You recently came out with an updated resource statement, not reserves, but resources. Could you summarize how the resources changed?
Yeah, I mean, the only thing that really changed in the resource statement was an update to our stockpiles, which we had obviously depleted. So there was some depletion that occurred on the stockpiles. All the other deposits remained largely the same, apart from Abore, and Abore resource changed on the back of the drilling that we conducted in 2023 and grew by about 38%. So we just wanted to update the market on that because we thought that the drilling was very positive. And again, we wanted to provide the market with what that has done to our resource. So we're going to have a further resource update in Q4 this year where we capture the drilling that we conducted at Nkran, for example, which wasn't captured in the one earlier this year, and then also Midras South, we're converting from resources to reserves too, and we'll have an update in the resource of the entire property in Q4.
You're looking to come out with an optimized life of mine plan in Q4. What improvements are you looking to do in the optimized plan?
Yeah, I think the main optimizations that we're looking to do is to bring forward cash flows to the front end of the life of mine. We do have an opportunity to do that. We have far more cash on the balance sheet than what we expected to have at this time when the technical report was published. We also have more flexibility with regards to how we sequence our mines at this time as well. So the main optimization will be looking to bring forward cash flows to the front end of the life of mine.
And how are you doing that?
The main way of doing that is if you look at our life of mine plan in year 28, 29 and 30, those are the years that you see higher production and you see lower costs. And that's driven predominantly by the Nkran deposit. Now, at the time when we delivered that technical report and the life of mine plan, we were still in the joint venture. In the context of the joint venture, we wanted to deliver a plan that was fully funded and self-funded, such that our partners didn't have to inject capital into the operation to execute the life of mine plan. So now that we own the asset on a 100% basis, we don't have that restriction. That's the first thing. The second thing is that we have far more cash on the balance sheet than what we expected. And the reason why we pushed Nkran back in the life of mine plan is because it was associated with a significant upfront capital expenditure for the stripping prior to getting into the ore. There was about a $250 million strip associated with Nkran. So the other thing that we're doing in terms of optimizing the plan here too is we're looking to reduce the upfront capital that's required to strip Nkran. And we're going to do that by phasing the pushback into 2 phases and mining down the eastern wall of the Nkran deposit first, and then transitioning and mining the western wall as well. So that's going to have a function of reducing the total capital required up front to get into the ore. It's going to release the ore quicker. It's going to start generating cash flows faster as well. And the other thing that we're doing is we've identified that we can actually mine through the waste faster by using larger fleet and different bench sizes. So we're targeting 10-meter benches in the waste with larger excavators and larger haul trucks as well to get through the waste quicker. So that's the main optimization, to look at how we can advance the Nkran open pit further ahead in the life of mine.
Eventually, when the eastern and the western wall of mine, there will still be 1 pit, but you will start with sort of mine them as 2 pits.
Yes, that's right. Overall, there'll be the 1 pit, but we'll just take the eastern wall down first, and then transition to the west. The other thing that I will say is, by doing so, we're thinking further ahead than just the open pit, because by mining down the eastern wall down to a certain level first, what we will do then is we'll sink an underground exploration at it from the eastern wall, such that we can drill out that prospective underground while we're still mining the west wall at Nkran, right? So ideally what that will do for us is that we'll be able to define an underground if it exists, and then if it does exist, we'll be able to then ideally tag on underground tons and grades on the back of the depletion of the Nkran deposit as well. So, there has been some significant thought behind this, and the team is looking to optimize things as I've just described.
But so using larger scale equipment and starting with a smaller pit, does that change the strip ratio, which currently sits as 13.5 to 1?
No, we don't think that it's going to have a material impact on the strip ratio. There may be slight adjustments there, obviously, because you need to have certain widths for ramps and things like that. But ultimately, it's not going to be a material impact on the strip ratio.
What cost reduction measures are you taking, both operating on the capital expenditures and also on G&A?
Listen, I think cost reduction is something that is somewhat of a mindset, and that's, you asked me about how I build the team. I mean, I think I've built teams around this asset that are very conscious of cost control, and it's a day-to-day grind with everything on site, and it requires a certain culture to be built up within the organisation. And I can tell you that our general manager that sits in and operates the mine has done a very good job in terms of identifying and drawing attention to all team members on site with regards to managing costs. So that's broadly speaking, the culture has to be developed first and foremost, so people are identifying opportunities for cost reduction, that there's a system in place where people are rewarded for identifying and addressing areas where you can reduce cost. So that's certainly in place. The other thing that we've done is we've been very kind of prudent with regards to the way that we've structured our mining contract, to make sure that there's very little room for escalation in costs on the mining front. And we're seeing our costs thus far from the mining contract that come in where we expected, even though that those costs were planned, or about 12 months ago, almost 18 months ago, we saw those quotations come in, but they're still certainly on target, and if not below where we would expect them to be. So it's a very important point in the team's makeup, really, is cost control.
So the cost, or the operating cost per ton should be quite similar to or haven't changed much at all since the technical reports, which was based on 2022's pricing.
Yeah, that's right. That's exactly right. I mean, the operating costs are basically in line. We haven't seen much inflation in that front to date. So we've been doing a good job there.
Chris, thank you for being here. Could you tell us about yourself and your career?
Yeah, absolutely. Thanks for having me, Jasper. So I'm Chris Pettman. I'm the Vice President of Exploration here at Galiano Gold. So I've been here just about 2 years. Prior to that, I spent almost 11 years at Rio Tinto, actually. My last role with them was Manager of Exploration for Canada. I did that for about 5 years. I spent a stint abroad, so I managed the China exploration group for some time. I was 3 years living in Beijing, and I also managed the Mongolian exploration group, managing the brownfields work around Oyu Tolgoi for a year. Part of that, I was based here in Canada and got my start initially in the junior space. So I've kind of done from the very small explorers to the biggest majors, now back to the sort of the junior producers. I'm a geologist by training, but actually my first degree is economics. I did my economics degree first and then went back into geology. So I have a base in both of those fields as well.
Fantastic. And what was it about the Asanko project that attracted you and made you join Galiano?
Yeah, it's a really good question. Galiano and the Asanko gold mine, a smaller operation. And when I first joined, you could really see the upside potential. And that's what I was looking for when I left the major, right? Was something that, was exciting. We could build a company, really good asset. Obviously, the geology's got to be really good. And, when I looked at the Asanko gold mine, the tenements that they had, the underexplored nature of the belt, the upside potential that I could get involved with, got really excited. And then, I meet the team, Matt Badylak and the crew here, a young, energetic group that's looking to build something, right? Not sell something, but actually grow this into something much bigger. And that was exciting for me. And that's really why I joined. Go through and give you a bit of a highlight of the recent work that we've been doing at Asanko and some of the things we're excited about in the future here. So this first image that I'm showing here is Ghana, Southwest Ghana. This is where we're located. Now, this is one of the most prolific orogenic gold systems in the world. You can see the Ashanti belt is to us, to the east of us, and we have the Sefi belt to the east, to the west. This is just an image that shows you some of the larger operations that most people will be familiar with. Obviously, Obuasi at Angle Gold here, it's over, 60 million ounces. You've got Ahafo, another 20 million ounces to the Sefi Belt. Tarkwa, obviously with Goldfields, a Duprium that's just been joined, one of the largest gold mines in Africa. So it gives you a sense of where we actually are when it comes to the Asanko Gold Belt. We zoom in here, and this is where we are. So the Asanko Gold Belt is an orogenic gold belt that lies within the Kumasi Basin, which is sandwiched basically between the Ashanti Greenstone Belt to the east and the Sefi Belt to the west. And when you look at our holdings, essentially we have the dominant tenement holding in the belt. So these deposits can be classified as classically orogenic, as you say. So they're shear hosted, but they also have a large component of extensional array veins that host most of the gold. The deposits themselves, we have 9 that sit inside our tenements on the belt. They range in host rocks between intrusives like at Abore and metasediments at places like Nkran and Esaase. So it varies depending on where we are within the tenements. You can see in this image here, there are 4 primary shear zones that host the mineralization on the properties that cut across the tenements from northeast to southwest. And all of our known deposits lie on these and are typically the focus of our exploration work. So we zoom down first, and what I want to do is talk a little bit about some of the near mine work that we've done in recent years since 2022. And Abore is obviously top of mind, given the fact that we've just started mining there. It's our current active pit. So everyone has lots of questions and wants to understand what's going on there. And so you can see where that sits in the tenements. We zoom in and you get a sense of what the morphology of this deposit looks like. It's about 2 kilometers long in strike length. And this image here, as I rotate around, I show this one because it shows in white the drilling as it was prior to 2022. So this is prior to us getting ready to start mining. You can see the resource there. This is how it's stated in our current technical report by gold grade. And then in 2022, as we were getting ready to think about mining, we actually wanted to de-risk the 1500 resource shell, and that's what you see there in gray. That's currently in our technical report. The shell as it would be designed at $1,500 gold. And these black traces that you see in here now, so this is the work we did in 2022. And you can see most of that was sitting inside the pit. We were trying to convert inferred to indicated prior to mining, de-risk the shell before we opened it up. And we had a lot of success here. We're able to convert a lot of ounces. But what was really exciting is it was clear to us that following that work that there was a lot of upside potential underneath that. And so in 2023, we went ahead and actually put in holes underneath it. And as I rotate that, you can see these purple traces here all the way along the deposit, testing for mineralization. And really exciting results for us, because all the way from the north end of the deposit to the south, we saw really good, strong gold intercepts underneath the shell, all the way from the northern pit to the southern extent. And as I zoom in around here, one of the things that we've talked a lot about in the marketplace is the southern zone. We made a discovery here. It's called the southern high grade zone, but you can see in this cross sectional image here in gray, you see the shell. That's $1,500 gold. You can see our previous drilling, and these are raw assays on the 2023 drilling. You can see all of these good intercepts. We were really excited down here. We hit 45 meters at over 12 grams a ton in this hole that you see here. So this was really game changing for the deposit when you think about upside potential. So what I can do is actually roll through from this image and show you what changes that's made and sort of the relevance to the upside potential and the work that's going on now at Abore. So this is the resource at Abore as it was in our current technical report prior to 2022 and 2023. This is by gold grade. And you can see in the section there, that's the $1,500 design pit shell, as you saw in the previous image. And what I'll do now is overlay what it looks like post-2023. And you can see we've extended that resource significantly below the pit, and you see that very high-grade zone that we've identified there at depth. Really exciting. And it's important to note that this is open underneath this, and we'll talk a bit about that when we talk about the 2024
if
work.
If we stop here, from at least my perspective, it looks like some sort of almost like a cylindrical shape, and the pit is far wider than at least the mineralization that I see.
Yeah, and so what you're looking at here is an intrusive body. So at Abore, it's unique at the Asanko gold mine that almost all of the gold, probably 95% of it, is contained within an intrusive body that dips slightly off to the west, and you can see that reflected essentially in the resource model. So it's not exactly perfect match, but pretty close. What you see when you look at the gold grades there is essentially the shape of the intrusive that's mineralized. So obviously, as we go deeper, the pit widens up to address, and to get to that mineralization. That's one of the things we think about in exploration is, how do we find ounces that are going to drive value without increasing the strip ratio too much.
Okay, but so it is in fact wider, because it looks like the pit is a lot wider than the intrusive body.
Well, it is, because you've got to obviously step back to be able to get to that mineralization, right? So the deeper you go, the further you've got to step out to get to that mineralization at depth.
Okay, and then so intrusive body, but is mineralization hosted in shears, or
it is,
are you seeing dikes?
No, so it's really interesting here. So at Abore, it's all shear hosted, but the mineralization itself sits in a combination of shear veins that actually cross cut through the intrusive body, but also extensional arrays that form perpendicular to those. This is very typical in orogenic deposits. So what you see basically here is that there's metasediments around that are relatively soft and they behave ductily, and this thing has a big shear zone that actually goes into the screen that trends off to the northeast here along the edge of the ore body. And as that motion is happening, the sandstones, they move very ductily along the edge of this thing, but when those meet the granite itself, which is the intrusive body, that pressure actually translates into the granite and forms those cracks that fill in with quartz and then are mineralized. And so it's all shear hosted, but sits within the intrusive itself.
And so then You improved the grade 13% and increased tonnage by 22%, resulting in a quite nice resource growth in measured indicated resource for Abore. Where did the resource growth primarily come from?
Absolutely. So it was very exciting for us to be able to, as you say, have a pretty significant growth in the resource. It's actually a 38% overall increase in ounces. We added about 181,000 ounces to it. And as I step through here, I'll show you where that grew from, right? So this relates to that. This image here is that same section which shows resource classification before we drilled this at depth. So the red was indicated and the green was inferred prior to our drilling here in 23. And this is what it looks like now. And so you can see we've added significant indicated mineralization. And this goes to your question about where's that growth in the resource coming from. Obviously now that indicated material can come into our resource, right? And you can see it's inferred significantly deeper than that. But what's nice about it is I zoom out here into actually a long section of Abore. You can see in this image, there's actually all of these raw assays. You can see all the way along the deposit, you can see these intervals coming along and showing good grade. And this image kind of shows that and speaks to where this is coming from. So you can see some of the primary intercepts in the south zone that we've just been looking at. So these 4 holes that are about 120 meters of strike length in total make up the main south high grade zone. But you also see really good intercepts and grades all the way along the deposit. And so
how much of the higher grade portion southern portion was included in the resource update?
So it's all in there. So the entire south zone is now inside the resource. Most of that is indicated, some of it is inferred. But you can see in terms of resource growth, we saw resource growth below the 1500 shell along the entire length of the deposit. So all of that is coming from below the shell. There's actually a zone right in here you can see that is now new that was previously unknown. And so in terms of that 38% increase, it's all coming into the model below the $1,500 resource design pit.
Reserve. So the resource is based on $1,800 an ounce gold. The reserve is $1,500. How will the reserves change when you increase, and how much will the grade, will that dip quite a bit or decrease?
Well, the grade actually, our resource grade actually went up, and that was part of the reason that we saw.
Yeah, no, I'm talking about the reserves. So when you move from $1,500 to $1,800 or $1,900 an ounce gold price assumption, how that will change your reserves?
Yeah, it's a good question. And so, I mean, that's obviously something we're looking at in a gold environment like this now, where, obviously 1,500 would be a fairly conservative pit today. If you move that to 16, 17, whatever the final number is, certainly going to have an impact overall. I mean, the grade itself is going to be around that 1.3 grams a ton because we're bringing in such high grades. So even when we go to higher gold prices, because the quality of the mineralization that we've been intercepting is so good, the grade's still going to rise. So this slide, just to finish off, really talks about, why Abore has become significant for us. If you look at our asset as a whole, the primary deposits that we talk about are Nkran and Esaase, and I'll talk a bit about Nkran in a moment. These are our largest deposits that are both, significantly over 1 million ounces in resource. Esaase is at 1.6 roughly. Nkran still has about 1.1. It's historically been our largest producer. And then we have a bunch of satellite deposits, including Abore. But what Abore has really shown is that these satellites can grow, and there's a lot of upside. And Abore is no longer simply one of our smaller satellites that is nice to have. This is becoming one of the bigger pieces of the life of mine plan, given the size of it. So we zoom back out, and just to give references to where we are, and the tenements here it's quite large. Like, this is 476 square kilometers of land. It's the dominant position on the belt, which puts us in a very envious position when it comes to obviously exploration. But it also shows the amount of room we have to actually grow. So if you look at Nkran, this is actually a really good shot. I like this one because it talks about the shear zones and how we have these deposits sit, linearly along these belts, right? So you can see Nkran, and as we look to the northeast, you can see some of the smaller satellites at Akwasiso. We've mined there. Dynamite Hill we've mined out at Dubiaso. Off to the northeast, you can see them all lining up along what we call the Nkran shear. Now, Nkran is what has been referred to as the crown jewel of the Asanko gold mine for a lot of years. This has produced very well in the past. Previously, cut two for Asanko was extremely profitable. These are really high value ounces. And so for us, when we look forward and from an exploration point of view, Nkran is really important for us to understand and provide optionality to the mining team. So this image, similar to the one I showed you for Abore, shows the current 1500 designed reserve pit for Nkran and what the drilling looked like prior to 2022. So you can see there was some mineralization known below that pit, but we wanted to do some infill to understand, again, what the upside potential is there. And so in 2022, we came underneath that 1500 shell with these, you can see the black traces there, and we're really excited to see that Nkran, despite the fact it's a relatively mature deposit on the belt, is still growing, and there's still a lot of room to grow this deposit. Seeing really good grades here. So underneath the shell here, I think this is hole 100 right in here. You're seeing 58 meters over 4 grams a ton. We're seeing really high grade. You'll see there's at least a dozen intercepts that we have in various holes here that are more than 20 meters over 2.5 grams a ton. We have several that are running. I think best intercept there is something like 18 meters at 47 grams a ton. So there's a lot of 2.5, 3.5 gram a ton material sitting below the current reserve pit. So just to show this another way and highlight the work we did in 2023, the black holes you see here now are intercepting that Nkran resource by gold grade. And so one of the questions we had was, does the mineralization remain robust and consistent on the southern end of the deposit where we hadn't had a lot of drilling? And so 2023, we actually put in this program here, and we're able to demonstrate that it does in fact continue out here to the south, outside of the current reserve pit. And is robust. And so that mineralization has been converted to indicated. And then beyond that, in this section, you can see, okay, there's lots of great mineralization below the 1500 shell. But below that even, we had a question in the exploration space, which was, what's the upside potential long-term in terms of underground operations? So if you look to our contemporaries in the belt on either side of us, in the Sefi belt or in the Ashanti belt, there are several examples of open pit operations that have successfully transitioned to underground operations. So we really wanted to understand, is that something, as we look longer term into the future, is a potential for us at the Asanko and at Asanko. And we put in these 9 holes in late 2022 to understand, does the Nkran system continue to depth? And these are significantly deep. So these are 900 meters below the existing as-built pit. And you can see very clearly the system remains very strong and robust and is open. We're seeing really good grade and widths down here that are amenable to underground mining. And so this is something that...
What type of grades and widths are you seeing at below the pit shell?
We see, it varies depending on the holes, but we see 20, 30 meters at 2.5, 3 grams a ton. We see 10, 15 meters at 10, 12 grams a ton, depending on where we are in the holes. And so these are very widely spaced. They're 120 meter centers, and we only have 9 pierce points. So we're just getting an early indication of what those grades look like. But if you look at an underground operation in Ghana, we probably want to be seeing 2.5 gram a ton average feed grade, which we can certainly think we can produce given the results that we've seen down here, right? So mineralization's likely amenable to that in the underground, and that's sort of future work in the exploration space. We'll continue to explore those options and look at not only to Nkran, but if you looked at Abore, this becomes a really important question for us at the other deposits, right? So if Nkran has got underground potential, you look at Abore. So in that previous slide, our deepest part of the current design pit is only 150 meters deep. Right here, we're at 450 at Nkran. And this is excellent mineralization that's high value ounces they're going to be very economic for us. But at Abore, you've got 1,800 meters of strike length, and we're seeing the same kinds of grades that we're seeing at depth at Nkran, but much shallower. And so when you think about the future of Abore and underground in the belt as a whole, it shows that there's work to be done at all of our deposits at depth to understand if there's those same kinds of opportunities beyond just Nkran.
And so will you perform any deep drilling this year?
So we won't this year. So the focus for us in 2024 has been to provide optionality in the near mine space at shallower levels for the mining as they get going. So obviously working at Abore, looking at Adubiaso, which is one of our smaller satellite pits that we want to get going. So, we've done the work, the initial work anyways at Nkran to understand that yes, there is potential. We are looking at future work in terms of how we would actually explore that efficiently. Obviously, these are getting to be deep holes at Nkran, so it's costly to drill that deep, right? So we're looking at options as we, advance the Nkran open pit, or our cut 3 as we call it, which is scheduled to begin by early next year. How would we actually get underneath this more efficiently? Does that mean sinking an exploration ahead as they advance the open pit? Things like this. So, we need to find a way to explore efficiently. And at Nkran, that means probably, design that in as the pit advances.
Yeah, that's probably a lot better since you can. It will save probably 300 meters of drilling, which is which is quite nice. What's your all-in drilling cost?
We'd probably save over 500 meters depending where we put the adit. Yeah, so significant cost savings, and that also puts us at a point where we're doing that drilling in line with the life of mine plan where it makes sense, right? As you're advancing it, the open pit, now we need to start to understand the underground.
And what's your average all-in cost per meter for diamond core and the RC drilling?
Yeah, so that really varies depending on where we are on the tenements. So we actually have 2 groups in the exploration team. So we have the near mine team that's focused solely on providing, new options for the mining team at our existing deposits, looking for new shallow ounces at the deposits, or as you've seen here at Nkran, some of the deeper stuff. Then we also have our Greenfields generative team that works in the wider tenements that are very early stage work. And so, those 2 environments have very different cost structures at times. So, in 2023, our RC costs were about $84 a meter, all in, not including our assays. That ranged from up to about $100 a meter at some of our sort of further afield work where the logistics is a bit tougher. And our diamond drilling ranges anywhere from about $180 a meter all in to about $220, $230. Obviously, as you get deeper, those diamond meters start to get more expensive. So all in on average, we're about $200 a meter, which is really competitive. All right, so that's kind of an overview of Nkran and the work that we've done there and why we're still really excited about it. Like I say, it's called our crown jewel for a reason. A lot of the NPV of the asset sits down here in cut 3 that you can see down in here. We think that there's potential to expand that mineralization, but it's still growing. And that's what makes Nkran so exciting. We know there's a lot of value there and a lot of really high value ounces, and there's more to come.
So could you just, before we dive into each deposit, give us an overview of this year's exploration plans? I mean, how many meters are you looking to drill? What's the budget, and where are you targeting?
So overall, the budget in exploration this year is a very healthy $15 million. So that's split pretty much 50-50 between our near mine exploration work and the work in our greenfield space in the regional sense. So that will be largely drilling. The plan is anywhere between sort of 35 and 45,000 meters are planned between those 2 programs, and and we can talk a little bit about the various programs and areas and targets we're going to put that money into. There's still some geophysics going on in the greenfield space and a lot of mapping as well.
What do you have 2 programs?
We do.
What are those?
Yeah, and so I can talk a little bit about those. I've got a slide at the end, but we have, like I say, our near mine program, which is focused on this year at Abore, Adubiaso, Midras South, and I'll talk a bit about Midras South. We're excited about that. It's some of our low-hanging fruit in terms of reserve growth there, and we're working at that currently. And then we have the Greenfields group that's out in the wider regional tenements, and we have a series of targets that we're working. We actually have developed a pipeline over the last 2 years of targets that have been prioritized and ranked based on their technical merit, logistics, potential value to the operation. And they range anywhere from really early stage ground truthing, prospecting, and mapping, all the way through to early stage drilling. And we'll talk about those as we go through at the end of the presentation here. But obviously,
fantastic.
some of the ones we've talked about.
If you just could summarize, Midras South is one of your low-hanging fruits. What other low-hanging fruits are you seeing to sort of quickly add ounces to your resources?
Yeah, well, I think in terms of, to quickly add ounces, low hanging fruit it's a relative term, I suppose. I mean, Midras South is something that we have a resource that has been sitting there of about 230,000 ounces that we're currently drilling off to bring into indicated classification to be able to bring to reserve. And I would say that in terms of reserve growth, that's certainly, low hanging fruit for us. In terms of, growth that's in the near mine space, the question about Abore, how big can Abore get? Abore is open at depth along the entire strike length, right? So we know that there's more mineralization to come, and there's no indications that it's going to get any worse at depth. And so, we know that will grow. The question is simply, when do we want to do that drilling? How much value does that bring given the mining that's going on there now? Obviously, the deeper you go, the strip ratio starts to change. And so we need to be cognizant of that. So in terms of low-hanging fruit, I would say Midras is probably the biggest one. Greenfields, there's never really a lot of low-hanging fruit. It's always a challenge in the greenfield space, but we do have several targets, including Judge Tresso, where we had some really good intercepts from 2023 that we're following up on that I would say, we're further down the line towards trying to identify a resource.
Fantastic. And so, but what's your feeling now regarding exploration at Abore in terms of meterage and also in terms of sort of infill drilling contra sort of expansion drilling at depth and along strike?
So we have put 4 holes into Abore in the southern zone underneath them, simply to get a sense of what does mineralization look like as you continue to step at depth. Beyond that, really, we've put in so much drilling over the last sort of 18 months and had all of these positive results. The resource model is currently, going through its upgrade. We're mining there. And so we're kind of in a holding pattern from an exploration point of view. Let's take that data. Let's make sure we understand it really well, get our interpretations together, make the decisions the miners need to make about, what's the optimum pit there now, given the new drilling that's in place. And then going into 25, we'll evaluate what that looks like in terms of additional drilling that's needed to create more value there at Abore. All right, so we were transiting through Nkran and coming back out to talk about Midras South. So Midras South, as I say, is currently in resource for us. It's about 232 ounces, 1,000 ounces, obviously. It's located about 8 kilometers as the crow flies from our processing plant at Nkran, so it's still relatively close for us to get to. And this is something we've been drilling off starting in late 2023 and then into this year. We've just recently finished up the last couple holes this week at Midras. You can see there's 2 design pits here. These are all shallow. This is mineralization that begins at surface, so obviously, this is something that we're really keen to have into the reserve to give the mining teams the option when they're doing their life of mine planning to bring this in. So we're finishing this drilling up now, and the goal is to convert as much of the material here from inferred to indicated as we can and complete that new resource model that'll come out with our MRMR update that'll be towards the end of this year. So we zoom back out, and this is sort of the quick highlight of the 2023, 2020, late 2022 work we did in the near mine space, obviously focusing on Abore, Nkran, now Midras. We're doing some work at Adubiaso right now, which is again off to the north, a relatively, a smaller deposit, part of the satellite, but an important part of the life of mine as we go forward here. Now I want to talk a little bit about the greenfield space or the regional space. I guess some would call it brownfields, given it's still close to mine, but we call this our regional greenfields work. So as I mentioned, we've created in the last 2 years a very specific group of talented geologists at the AGM, as we call the Asanko Gold Mine, specifically tasked with adding new ounces in the greenfield space, making new discoveries. And we're really excited about this work because despite the fact we're in, this really prolific gold area, they call it the Gold Coast, previously when the Brits were around for a reason, right? I mean, there's gold everywhere. And it's been relatively well worked, particularly the belt on either side of us. The Asanko Gwa, where we sit, is actually relatively immature when it comes to exploration. And so there was all this ground that hadn't really been worked in, the last decade. And so we needed to go back and look at our targeting, understand, what's the upside potential here. And the team has gone through and done a really good job of highlighting and developing a pipeline of targets. We have dozens and dozens of targets to get through because it's so prolific. And the task for us has been, well, how do you prioritize that? How do you best use your resources? How to get to your best targets first? So they've developed a really good ranking system that we've been using to understand what the highest value targets are. And in 2023, we had a really successful year. So, being able to refocus from just near mine to out into the regional space very quickly has delivered new targets for us that are really exciting. And so through mapping, prospecting, geochemistry, soil surveying, geophysics last year, we were able to come up with several very exciting targets that we followed up. One of which is Judge Atreso, which is 4 kilometers due west of the processing plant, where we put in some first drilling last year. But I'll first talk about the one that I think that we're probably the most excited about, and that's called Sky Gold B. Now, this is actually sits up here to the very north of our tenements. This piece of land had not been worked by Asanko or any previous operators before. It was completely virgin in terms of exploration. So we decided to go up there and run a regional geochem survey just to understand if there was any potential, right? And I zoom up to here just to show you where this land is, and I'll overlay what came of that. And so we identified a really robust, over 4 kilometer long gold in soils anomaly. You can see that here. And I've overlaid, there's the Krieged image that shows you you can see the trend of high grades, but I've also left all of the individual sample points just to highlight how robust the signal actually is. It's multiple points across multiple lines. If you see the scale there, anything that's orange is more than 100 ppb soils, which is extremely anomalous in this terrain. Anything yellow is over 50, which is anomalous as well. But you can see anything over red is over 500 ppb up to 2400. So these are extremely anomalous values. What we really love about this is that it's not only big, but it trends in the exact same direction as all of the main shear zones in the Asanko Gua. So we think we've probably identified another shear zone that wasn't previously known. We know there's gold up in the area. There are artisanal alluvial miners that mine at the base of these hills. And what's really great about this anomaly in terms of its morphology is that these are actually topographic highs. There's a ridge line here that is anomalous in gold. That's never been drilled before. It's never been tested before. And in the valleys and lowlands around this, you see artisanal miners mining alluvial gold. In fact, we even have a very small group of artisanal workings here where these guys have put in meter by meter, very small scale shafts that go down, up to 20, 30 meters, and they're pulling out mineralized quartz veins. And so we know that there's gold in the area, completely untested. And we've got this anomaly trending in the exact same direction as all of our, major belts in the area, but we've never drilled it. No one's ever been out here before. And so we're really excited to see what that's going to look like, and when you put that in context to our other deposits, you see this image, and we've overlaid what we think might be another shear zone, conceptual that obviously. But beside that, for context and scale, Esaase, which is our biggest deposit by resource, there's over 1.7 million ounces in resource there still. That's about 3.5 kilometers long. You can see that for scale. Abore at 1,800 meters and Nkran at only 850 meters. So you can see this is an anomaly that has the potential to generate a deposit of significant size if it's actually there. So we're really excited to get on this one this year. We've done mag here as well, ground magnetics this year. We've got that data in-house now. We're currently evaluating that as we get ready to finalize our drill program that we hope to see, by the end of Q3, beginning of Q4, get underway.
And so how many, I guess that you will start up with one rig, and how many targets will you first test? And also when you test the target, how many holes do you drill to test it?
Yeah, so we're currently going through and finalizing that now. So it'll be a variety of drilling here, actually. So what we're trying to do is minimize our costs, get the most data we can for our dollar, but also minimize our impact out here as well. And so we're going to do a combination of likely air core drilling in the place of any trenching or anything like that. And then we'll also do some RC and diamond work, but likely using a man-portable drill rig, which will be we'll create, we'll have to, cut smaller access trails, smaller drill pads, cut down, less of the vegetation. So we'll start with one of those rigs and probably one air core rig. We have 2 primary target areas along the ridge lines we'll start at, and we'll expand out from there along the 4 kilometer trend. So meterage, could be around maybe 4,000 or 5,000 meters initially, but it'll all be results dependent, depending on what we see in that first round of drilling. If it's really good, we'll continue.
What would you like to see in order for you to move a diamond drill up there? No, that's not that's not handheld.
Yeah, well, look, when I say handheld, it's not a handheld diamond rig. It's actually a full-size diamond rig that can drill to 600 meters. It's just, it comes apart in small enough parts that people can actually take it up and we can carry it by hand and then put it back together so that we don't have to bring in large equipment to actually set it up, and you can actually, it's a bit smaller. We'll obviously, right away, we want to drill a few of those diamond holes to make sure we get good geological information, structural information to understand the setting here. Are there shear zones out here? What's the quartz veining doing? What's the folding doing here? Because these sediments are typically very folded in these terrains. So we'll do a little bit of all of that. But obviously, first pass drilling, we want to see some decent widths and intercepts of grade, relatively near to surface. That's what'll get us really excited. So that's Sky Gold. And I want to zoom out again and talk a little bit about Judge Atreso. This is something we drilled for the first time last year. It's due west about 5 kilometers from the Nkran processing plant. And this is just an overlay of some of the drill results that we had in 2023. So that image in the background actually is our structural interpretation. We're sitting along the tail end or the extension of the Abore Esaase shear zone here, actually. You can see those red lines there are interpreted extensions of the shear. The black dots are where we put in our drill rigs last year. Our best hole out here, we're quite excited for first pass drilling, was 38 meters at just about 2 grams a ton from 20 meters. So very shallow mineralization, pretty significant intercept, certainly for first pass. We had another one just south of that, and that sits, for my scale here, so that sits right up in here. Another hole just to the south of it was 17 meters at over 2 as well. So we have, really, good grades up to the north end of this trend. But really, we're hitting gold all the way along this trend, and it doesn't show all these.
Is this a long section, or could you what are we looking at here?
Yeah, so this is the plan section looking straight down. So the background of this is geology and structure, and then you can see as well historic geochemistry. So what drew us to this area, there was a historic geochemical anomaly here along our interpreted shear zones that had never been tested by us, and so we'd never drilled it. So we wanted to go out and understand what was happening. We put some geos on the ground. They were able to, through ground truthing, actually pick up visible gold and quartz veins from grab samples. Obviously got us very interested in the area, brought in our RC and diamond rigs and did our first pass drilling last year. And obviously hitting, intercepts like, almost 40 meters at 2 grams a ton, first pass from 20 meters at almost near surface, got us really interested. And so we've brought the rigs back there. We're currently drilling there now. We're testing the extension to the north of this trend, as well as to the south, which we haven't drilled at all. And it actually extends off of this image another probably 500 meters that is anomalous in gold and soils that we haven't yet tested. So this is one of the exciting, near field targets, call it near field, I guess, regional greenfield targets that we're following up on this year that we've talked about in the public space. We've also got drill rigs turning at another target called Akoma, which is 5 kilometers the other way, east of Nkran, that we're excited about. And when we get results, we can talk about those, but those are still in the labs and pending assays. So, that's kind of a highlight of, so the 2 primary targets from 2023. Going forward in 2024, we've got obviously the Judge Atreso drilling we're currently doing, our Coma drilling to the west of Nkran. We've got Sky Gold coming later in the year. We're doing some trenching at what we call Jenny Jetwin, which is actually just to the south of Esaase. Through geophysics, we think we've actually identified a potential extension of that trend to the south of Esaase. And then we've got various targets, across our tenements. There's another one called Abore Amoman, which actually, if I zoom out, so this is the Abore Amoman tenement here. This is Nkran for scale, for reference anyways. So in 2023, through soil sampling, we actually identified 2 very long 5 to 6 kilometer northeast, southwest trending gold and soil anomalies in here as well. So our teams are on the ground prospecting, mapping, and doing some geophysics to understand where we might want to focus our drill targeting for 2025 and beyond.
Is there any part of your tenements where you haven't done any sort of reconnaissance work or
Well, I would say
power
that
generation work?
probably not that we haven't done any reconnaissance work, and I say that because we've done pretty extensive mapping and prospecting across the leases over the last couple of years, and obviously prior to that, and operators have done that. But it's all about maturity of that work. So if you look at the tenements here, area like Abore Moman, actually, which is a relatively new tenement that came into the portfolio only 2.5 years ago. We've done our initial sort of groundwork, mapping, prospecting, geochemistry, a little bit of geophysics, but that's it. We haven't done anything else. So we're advancing across the tenement there in terms of early stage targeting. When you're in an environment like this with these shear zones where gold is so prevalent, it's actually easy to generate a lot of targets. And so a big part of our task right now is saying, okay, well, of the 100 or so targets you've got and that you've worked across the tenements, which ones are the best ones? And the teams are out there mapping, even as we speak today, they're still generating new ones. And so that's a big piece of that work. So in terms to answer your question, I wouldn't say there's anywhere on the ground that we haven't looked at or prospected on, but there's a lot of the ground, probably 25% of it, or 30 even, that hasn't had much more work beyond initial mapping, right? And maybe a little bit of geophysics. Yeah, so listen, that's an overview, Jasper, of some of the work we've done. I mean, I guess going forward, we've looked at Judge Tresso, but I've also got this slide that I can show you, which kind of talks to the exploration evolution over the last 2 years at the AGM. So you look at this image and what it shows you that in 2022, we were completely focused in the near mine space. And that made sense at the time. We needed to really get on our near mine, our existing deposits, help understand the geology, de-risk those assets, make sure we understood what we were doing in terms of, the mining plan and everything else. So exploration was really there to support the mining team and the resource team in 2022. And that's where all of our focus was, right? That ore body knowledge was so critical, to get right before we started mining again. In 2023, last year, we were able to start to move away from that near mine space a bit and rejuvenate that generative group. And so we actually put that group together, put the geos in place and tasked them with just, going out into the regional tenements and saying, okay, go work towards discovery. And you can see we were about a quarter of our spend in 2023 was in that regional space. And now that we've really got a handle on what's going on in our existing deposits, we've been able to go to a really healthy sort of 50-50 mix now in 2024, where half of our $15 million budget's going to the near mine space, and again, providing that optionality and new ounces into the reserves, but the other half going out and working towards discovery, which would be a real game changer for us if we can do it at the AGM. And this is just an image on the end here of what our pipeline looks like. You can't really see, I don't expect you to see and read those targets, but kind of highlights what we do in terms of process, right? You bring all of our data together, you prioritize in a prioritization system, basically develops this. You want to put lots and lots of early stage targets in the left-hand side there that are just target definition. And then you want to work them as quickly as we can and move them to the right and spit them out the pipeline at the right side, which would be, into reserves. So it kind of gives you a sense of how many targets that we have that are prioritized. And there's probably another 80 on this that haven't even made this list yet. And it's all about moving them to the right or getting rid of them quickly, right? So if they're not going to produce for us, we need to test them and get them out of the pipeline as fast as we can. And that's really where we're at now in the exploration space, a really healthy 50-50 mix between the near mine, the generative space, and a really robust prioritization process whereby we're trying to move through as many targets as we can quickly to create value. And then just this last one just kind of gives you an overview, everything we've been talking about in terms of the 2023 results. So it highlights obviously up at Abore, some of the best intercepts we saw there. That just highlights that southern zone, our 45 meters at 12.4 and 37 at 10.6. Those are the two of the best intercepts there. Some of the Nkran South extension work that we mentioned, you can see some of the grades there, 19 meters at 3, 18 at 6. That's just the south extension. That's not the infill underneath that we did in 2022. And then Midras South. We've released some of the early results from the late 2023 work there. And basically what that says is that, we're seeing what we want to see in terms of shallow mineralization. The resource model needs an update, obviously, now with new data, but it's looking pretty good for us there. So we're quite excited. And then out in Judge Tresso, those are the intercepts we talked about there, 38 meters at 2, 20 at 3.6, 11 at 3.6 in the Greenfield space that got us really excited about the upside potential. And I think is a good example of what is lying out here in the Asanko belt that hasn't been touched yet.
How will the news flow of Esaase results look like over the year, and also other exploration updates if you're without any?
Sure. Well, look, I'm not gonna say, look, we're gonna do it, at this schedule, and as we have in the past. As we find results that we think are material, we'll release them out to the public. We usually have an exploration update come at the end of the year. And it all depends on the rest of the news flow, depending on what's going on at the asset itself. So, like as we get results that we think are material, we'll release them out to the market as they go.
If you look at your exploration potential, what do you think you would have to find in your exploration program to warrant a future mill expansion?
Well, that's a really good question. I mean, there's obviously lots of parts to that, and depending on where it is, right? I mean, if you were to look at a Sky Gold, for example, and this is all very hypothetical, obviously, given that exploration is that, if we were to find, another, million ounce or more deposit up there, then you start thinking about, well, are there synergies with Esaase, with the plant to the north, right? And does it make sense to actually put a new plant to the north and actually process those together, right? If you find something significant of that size. There was a plant expansions. I don't think we really think too much about that because we're already, milling at 5.8 million tons a year. It's a pretty large and hungry mill. So for us, it's really about finding new shallow surface ounces to feed that mill and improve the life of mine, basically, and extend that, right? We'd love to see, obviously, we'd love to see a 1 million plus ounce discovery, to be able to feed that mill. Those are hard to come by. We think that might lie out here, but even if you find another 300,000, 500,000, 800,000 ounce deposit, that has significant impact on the life of mine of the asset. So I don't think it's necessarily about mill expansion, but about extending that life of mine.
From an explorationist or geologist point of view, where do you envision Galiano gold in 3 years?
Well, that's an exciting question, I would say. If I look at Galiano as a whole in 3 years, obviously still, from an exploration point of view, really excited about West Africa and, the tenements we already have there. So I think, we'll still be advancing exciting targets at the AGM. But I think that 3 years from now, I'd see us beyond just the AGM and exploring in other regions, whether that be in West Africa or other parts in the world. There's lots of geology that we think is prospective. It's about finding that right project that we can get ourselves involved in outside of the AGM. So 3 years from now, I see us as a multi-asset company that's got exploration efforts going on, not only at the AGM in West Africa, but potentially other places as well. It's all part of that Galiano building story, right?
How is Ghana as a mining jurisdiction when it comes to permitting, political support, tax stability, etc.?
Yeah, I mean, listen, as I said at the outset, I think it's one of the premier mining jurisdictions in West Africa, a long history of stable transition of government, a very strong and well-developed mining regulation in the country, and then a really solid understanding from the government about the importance of mining and the importance mining plays in the economy. So all of those things, are positive to running a successful business in Ghana. And then on top of that, you've got, as I mentioned, access to very skilled workforce that, again, have been in the mining industry, some for multiple generations. Yeah, I mean, I'm very comfortable in Africa, in Ghana, absolutely. Don't see any major issues on the horizon there.
And so could you give us an overview of the corporate tax rate and royalties that mining companies pay in Ghana?
Yeah, so the corporate tax rate is 35% in Ghana, and then the royalties, there's a 5% royalty, and then recently in 2023, due to COVID, I believe, I think it was 23, they added an additional 1% growth and stability levy, which basically means you've got a 6% royalty at the moment and then a 35% corporate tax rate in Ghana.
How are your relations with your local communities, and have you on any occasion had issues?
Well, listen, I mean, the thing in Ghana is one thing that you do need to get right is your community relation, because there are many communities that surround mines in Ghana and in West Africa in general. So, I mean, I think it starts with having the right team and regular engagement to understand the issues, if any, that exist with the local communities. And, we do a very good job there with regards to any mine or any deposit that exists near a village or a settlement. We do allocate $2 an ounce for the development of that region, which is basically governed by the leaders in that around the village. The opinion leaders in the village. So they decide what projects are necessary for their communities, and that's reviewed by us. And when there's an agreement on that, then those funds are released for benefiting the community. So that's one of the things that we do in Ghana. But again, I mean, we have a very solid managing director there in Nkran, who used to be the general manager on site as well. So he's had a lot of history with the local communities and has some very strong relationships in the communities in which we operate, and that's key for our success.
Well, you will be generating a lot of free cash flow. I mean, if you just look at a technical report and use today's gold price, include taxes, royalties, G&A, payment Goldfields, we're looking at 125 million at least of free cash flow net. So how are you looking to deploy your free cash flow?
Yeah, well, the vision for the company really is to use the Asanko gold mine as a foundation to grow a mid-tier mining company. So as you say, there is some excess cash flow available to us to do that. So the team is very much ready and set up to try and identify the next asset that we can bring into the portfolio. And we're very, very active at the moment in trying to find that. We understand that currently we have exposure with regards to single asset and single jurisdictional risk, and we want to try and diversify that as quickly as possible. And much of that cash will be used to grow the business.
Yeah, by the way, what jurisdictions are you looking at? And also, what kind of assets would fit Galiano?
Yeah, I mean, listen, we are obviously very comfortable in Ghana and certain parts of West Africa. We wouldn't say that we're comfortable throughout the entire West African region, but certainly there's some jurisdictions within West Africa that we think are comparable to Ghana. That said, the team that we've built and assembled here at the corporate office is certainly not Africa-centric with regards to our previous experience in terms of where we've operated and the teams that we've built. And so that, I think, distinguishes ourselves as well, in the sense that, we are comfortable outside of Africa as well. And we're small enough yet still to be able to define, our future. So the next asset may not be in West Africa. It may be further afield, but we are looking more globally as well as in Africa for our growth opportunities. One other thing that I think separates us from some of our peers is our access to cash and no debt. And I have spoken to the team, and the team's very aware that there's obviously, during this period of time, things are changing now because gold's run and the equity markets are starting to wake up. But there's been, a very long period where the equity markets have been basically dead. And so very good projects at the early stage of development have struggled with their ability to raise capital and to advance projects. And I think that's what separates us, is that we have a team, number one, that can identify assets at the earliest stages that will eventually become mines. And then secondarily, we have the capital and the cash to be able to assist those companies in potentially advancing their projects forward. So, when you ask about what type of asset we're looking for, early stage opportunities are certainly on the cards for us, and I think they fit well within our wheelhouse.
Fantastic. So then we are at our ultimate question, which is, where do you envision Galiano Gold in 3 years?
Yeah, well, listen, I think from my side, the near-term vision for the company is number one, execution. So execution of the life of mine plan, optimization, further any optimizations that we can, add into or add to with regards to the life of mine. We'll be looking at that. And the last one is growth, right? So growth we just talked about in terms of growth through M&A, etc. So I certainly, my vision would be that we are a steady, stable producer from the Asanko gold mine in 3 years' time, and then ideally having, one early stage exploration asset in the portfolio and a development project in the portfolio as well by that stage. I mean, that would be a pretty good outcome, and advancing the development project to production in a year or so post 3 years, so 4 years from now, having additional production in the portfolio.